Welcome back for a new episode of Deep Dive. Deep Dive is a program brought to you by Business Magazine and Bank One. This time, we are holding the Deep Dive session in our new head office, the Bank One Waterfront. We will focus on various hot topics related to sub-Saharan Africa. With us today to discuss these topics, I'm pleased to welcome Ronak Gopaldas, who is a political economist, a keynote speaker on various platforms, an Africa specialist, and the Director of Signal Risk, which is an African risk advisory firm. We also welcome Guillaume Gouges from Business Magazine. Thank you for watching this video.
Good morning, Ronak. Thavin. What are the implications of the Russia-Ukraine conflict on Africa?
Well, that's quite a complicated question, and I'm going to preface my answer with two caveats. So, number one, obviously, we don't know how long this conflict is going to go on, so that will determine how things play out. And secondly, of course, Africa is not a country, so the impacts will be different in different regions. I think, though, it's important to come up with a framework to assess this, and there are three real transmission mechanisms, economically speaking anyway. So number one is through financial markets, and typically in times of conflict, uncertainty and volatility, what happens is that there's a flight to safety. So what we should see is strength in the US dollar, which is bad for emerging markets and in particular African markets. It has an impact on their currencies, on their bonds, on their stock markets. There's a flight to safety, and generally the cost of funding increases and there's capital flight. So that's the first element. The second, I think, is in terms of trade. And over here, the outlook again is quite mixed. You know, on the one hand, you've got demand that is going to be muted because Europe is going to face a number of issues as a result of this. And we know that Europe is a key trade partner for Africa. But at the same time, commodity prices are increasing, which should be good for the oil producers on the continent, the likes of Nigeria and Angola, the gold producers as well, South Africa and Tanzania, copper producers like Zambia and the DRC as well. But at the same time, you know, wheat importers like Egypt are going to suffer. You know, the Russia and Ukraine together comprise 30% of global wheat exports. And Kenya is an oil importer. So outlook on that front is mixed. And in terms of the real economy, which is the third element, I think, you know, Russia is not a major investor across Africa yet. But, you know, the outlook, again, is somewhat mixed because you're going to have winners and losers. Growth, you know, could tick up as a result of commodity prices in certain regions. And obviously affect the financial accounts negatively in other regions. So, you know, a lot of nuance to this answer, which I think is important because the outlook for the continent is quite mixed.
One of the most political consequential events in Africa this year will be the elections in Kenya in August. What should we look up to?
So, elections in Kenya are always full of drama. 2007, 2008, you had countrywide violence. 2013, both the leading candidates were facing criminal prosecution at the International Criminal Court. In 2017, the election result was annulled. So there's a lot of anxiety around this election and what it means, particularly for investors. And the question is, will the current Vice President, William Ruto, succeed in his bid to become president? And over here, investors are worried that they're shades of a Jacob Zuma in South Africa. He's a charismatic populist. He's fallen out with his political superior Uhuru Kenyatta. He's got allegations of corruption around him, and that's creating a lot of anxiety and uncertainty. Now, can he win? I think, you know, the established political elite in Kenya have deep pockets. They have the power of incumbency, but William Ruto is a self-proclaimed hustler, so it's important not to write him off, and stranger things have happened in recent elections on the continent.
So what are the key issues investors are facing in Nigeria?
So I was actually in Nigeria last week, and it was really interesting speaking to folks on the ground over there. You know, already the election cycle jockeying has started. The question is who's going to replace President Buhari. And both leading parties, the APC and the PDP, are going to have their conventions to elect their candidates in the coming months, in the next couple of months. Key issues economically remain the same, and there's a bit of policy inertia at the moment in Nigeria. Is there going to be movement on the foreign exchange regime? They've pursued very unconventional monetary policy over the past few years. Will there be some movement on the fuel subsidies? And again, with higher oil prices, this has got significant implications for the fiscus. Will the attitude towards foreign investment change? That's been quite heavy-handed and quite hostile. And then the last concern is whether oil prices will actually translate into a material impact on the economy, because that economy is not producing at the levels of oil that it should at the moment. And of course, they import the refined product. So quite a few moving parts in Nigeria, and very much in a holding pattern until the election.
Now let's talk about Mauritius. Can Mauritius really be the gateway to Africa?
So I would say yes and no. Mauritius has really benefited from a lot of South Africa's issues in recent years, political and economic instability. South Africa is a high tax, high regulation, high labor cost market, and Mauritius is painting itself as the opposite. Low tax, no exchange controls, generally politically and regulatorily stable. But in recent times, with the grey listing, that's been a dent to the reputation. I think in reality, Mauritius is too small, doesn't have the scale and connectivity to be a real gateway, but can be a financial gateway. So yeah, I think, if it really wants to be an African gateway as well, it probably needs to be more aggressive in its approach towards the rest of the continent.
So Thavin, can you tell us how does this link back to Bank One's strategy for supporting growth in SSA?
Bank One's international strategy has been pivotal to its success over recent years. Through the presence of our shareholders, INM Group and CL Group, in key African markets and our country coverage in SSA, we are a strong and reliable banking partner from Africa for Africa. In this respect, we have expanded our international banking team capabilities, which focused on strengthening our expertise in financial institutions, trade finance, and relationships with Africa-focused DFIs. We are emerging as a thought leader with strong abilities to deliver uniquely African solutions to African problems. For instance, through our currency swap solution, we support the short-term liquidity requirements of sub-Saharan African financial institutions and central banks. What we want to do here is to bridge the seasonality of USD flows. Our solution is scalable, profitable, and replicable for many central banks in sub-Saharan Africa. With the African continental free trade area, I believe this is the ideal time for the African-focused banks, such as Bank One, to seize the numerous opportunities ahead. Bank One is well positioned to be the forefront of this journey by facilitating cross-border payments and enabling trade financing and investment into Africa. We stand ready to support international investors, African financial institutions, and regional corporates with our full suite of products and services. Bank One continues to build up its business in Africa and to bring real value by addressing market needs.
Thank you, Thavin. All eyes will indeed be on Africa. Well done to Bank One for its well-defined strategy in sub-Saharan Africa. Ronak, Thavin, thank you for sharing your expert views. As for me, I will see you soon for another video of Deep Dive. Thank you.